current focus is on ADAS and computer vision. He has over 25 years working in computer vision, digital imaging, and embedded camera technologies. And welcome, Rudy.
Thank you for the kind introduction. So my name is Rudy Berger. I am a double E by background and started 5 companies in the imaging space and computer vision space. Started Woodside Capital about 15 years ago now, and I now head up our imaging and computer vision practice. What that means is that we just heard about the venture capital world. I'm the guy that works with oftentimes venture capital-backed companies and looks to maximize the value that these companies can then be sold to Apple, Intel, Google, and so forth. And it's part science, part art. Companies in the, let's call it sort of, I don't know, sub $300 million M&A band are sold for a combination of financial value and strategic value. The strategic value being what are they actually worth to the individual buyer that's interested in them, and not a multiple of their, the individual company's revenue or profitability. Whereas financial value is the metrics that investment bankers love to waffle on about, multiples of revenue and EBITDA. So I've spent, much of the last 15 years working with these so-called growth stage imaging and computer vision companies, and of course have formed opinions over this period of time as to which companies are likely to go on and make their shareholders and investors happy, and which ones are going to have a tough road ahead. So my primary objective here is to just share some of those insights. I'm going to, at the end, focus in on a couple of particularly hot markets, the consumer electronics market and the automotive market, and share some insights there. I promised Jeff that I would talk about what's hot and what's not. It's much more exciting to talk about the what's hot piece. So if I forget to talk about what's not, remind me at the end. The summary, so sort of start with some of the conclusions. I've just become aware over the last decade or so that many of Silicon Valley's hottest companies are really not technology companies anymore. And we don't even think about them in some sense as technology companies. They started that way. They've been birthed out of this ecosystem, but nobody really cares anymore. What technology Facebook servers are running on. It's all about the service that they're delivering. And I suppose to that point, I want to remind everybody in the room, particularly the CEOs of growth stage companies that are inevitably thinking at some point about selling their company, that embedded vision it's an enabling technology. It's not a company. It's not even a product. It's an enabling technology. And I would expect to see this technology gradually disappear into the framework of many, many industries, so that there will no longer be computer vision technology companies. This will simply be an enabling technology that exists across a large number of different markets and applications. And I think that has an impact on how we should think about these companies and position them. So I have divided this up, and I'm sorry for the eyesore here, but the way I propose to think about and talk about the market segmentation and the companies themselves is broken across 6 different market verticals. So consumer mobile, medical, robotics and machine vision, automotive, security and surveillance, sports and entertainment. That's the way I happen to have done it. There's nothing scientific about this. It's simply, this taxonomy helps me think about the different markets. And then underneath these markets are a number of enabling technologies that we've heard a good deal about today, from the embedded software, processors, sensors, and so forth. Right? So overall, this is how I'm going to talk about the market today, and in particular, thinking about where the opportunities are and are not. Another way to think about this segmentation is by volume. Where are the large volume markets? If you're developing a semiconductor component, whether it's a sensor or embedded processor, you have to be thinking about the areas to the right, because unless you're shipping 1 million of whatever it is you've got a month, right, you probably cannot justify the ASIC that you've gone off and spent $10 million of your investors' money on. So, the high volume applications, which by the way, are many of the applications that have been receiving a lot of the venture spend, are the ones over to the right. And as I said, I'm going to talk a little later specifically relative to automotive and consumer as to where the opportunities for private companies are, and hopefully shed some insight into that. So again, looking at these 6 markets, we can see this type of forecast for revenue based on each segmented component. This data comes from Tractica. The reason agriculture doesn't show up here is that it's simply too small on this particular scale. I love the company that we just heard about that can tell the difference between a weed and a lettuce, but not expected to be in this scale a huge market segment. So again, looking towards the bottom, the 2 largest are consumer and automotive. So what do we see as the drivers and conversely the barriers for private companies that are either in this market today or thinking about getting into the market? Clearly the drivers are, AI is red hot. This time around it seems to have really be sticking. It's been a long time since Marvin Minsky and company at MIT, but we really seem to have found an application area where AI is sticking. Likewise, if you can find the people to develop the code, and that becomes more and more of a challenge, there are relatively low barriers to entry for many of the market opportunities for computer vision. And there are as many different applications as you can dream up. So again, that tends to be a driver. It's why there have been so many companies funded recently. I think the other driver is that we are starting to see, and I would say we're right on the cusp of a consumer-based computer vision revolution. I mean, it's incredible. Jeff was just telling me that I think there were 900 people in the audience yesterday, this morning. And I was trying to think earlier about, well, how many actual volume computer vision products are there or have there been in the market? And there really haven't been that many. I mean, there was, of course, the PrimeSense Connect, which was one of the earliest products. Of course, Mobileye, I guess, could at this point consider that to be sort of on the cusp of a mass market product. Snapchat acquired Luxury, and that I suppose now is for the bunny ears and so forth on selfies. That's kind of now a mass market product. But in reality, given the investment that's gone in and the amount of attention that this area has received from both startups and large companies, from Intel on out, we're just at the very beginning. we haven't seen that much evidence yet of everyday objects that have computer vision. And clearly we think this is going to change. So another driver, sector growth, lots of venture dollars being spent in this area. These are global numbers. I'll get to US numbers in a minute. And to my point earlier of financial buyers versus strategic buyers, there have been clear strategic multiples and valuations being placed on private companies over the last few years. On the downside, or the barriers to success for these companies, and in the world I live in, success is really measured by, can you get a good exit that's going to make your shareholders and your founding team happy? There are lots of competitors. It's already a very fragmented market. Again, I think this is a direct result of low barriers to entry, particularly if you look at things like the home security market. How many cameras there are out there that support some element of computer vision. So, some aspects of the market, despite it being very young, are already quite crowded and fragmented. Silicon Valley must now be one of the most expensive places on planet Earth for starting a computer vision company. Google, probably about a year ago, told me for acqui-hires, they'll pay between $1 and $2 million a head for experts in deep learning and AI. Very hot area. So I don't know why it necessarily makes sense anymore to put engineering teams in Silicon Valley. So as a result, lots of companies are choosing to put them elsewhere. And the third point, I think, is also of significant importance, is that, again, computer vision, embedded vision, is not a product. It's an enabling technology. And so many companies require knowledge of another industry in order to be successful with their product. It's whatever industry they're applying the computer vision to, whether it's the cosmetics industry or architecture or what have you. So I think that provides some unique challenges for product marketing within the companies. Just a little bit more data on investment now, a US investment into computer vision companies. What this is showing is that the average dollars per deal has been going up, even though the number of deals funded per year has started to flatten out a little bit, suggesting sort of a shift of funding towards smaller number of deals, maybe later stage. So looking at the venture investment, and again, I've stuck to these 6 categories that I defined up front, and then expanded into a few more. On your left, this is how these 88 transactions that we were able to find over the last, say, 3.5 years have divided out. So pick 1 or 2, consumer represented 28% of that 88 transactions. Automotive, 7%. If you look at it in terms of dollars spent, again, by venture investors, the vast majority of it has gone into consumer electronics, and only 1% into automotive. Now, there's a reason for that, which is that VCs have historically, and seeing some changes, but historically the automotive market doesn't really fit the venture investing paradigm very well. And computer vision has opened up some new opportunities for investors, but has not changed it so radically that risk-reward calculus has changed. So bottom line, the majority of the dollars have gone into consumer electronics. Going through a number of the most active investors. I've intentionally picked here investors that go from, the sort of 500 startups that tend to put very small amounts of capital into a large number of companies, to the Andreessen Horowitzes of the world, the NEAs of the world, that like to they at their heart they're growth capital companies, particularly NEA, and these show for these more active investors, more active computer vision investors, who they've invested into over the last few years. Corporate investing, so corporate strategic investing, has grown enormously over the last 5 years. And it seems like virtually every one of the Fortune 1000 companies now, from Disney, Coca-Cola, Caterpillar, all have their venture funds. Many of them do not like to lead funds, but they all have funds now, and the ones that are listed here have been the most active in investing dollars into early stage, growth stage, embedded computer vision companies. And there should be no surprises here. Perhaps the third one on the list here, Microsoft Ventures, up until about 3 or 4 years ago, as a corporate policy, did not make investments into companies. Their view of the world was they didn't want to disturb their ecosystem of developers around the Microsoft platform, and therefore would, at policy, not invest. That's changed. Notably absent from this picture, of course, is Apple, who, for the most part, still maintain that policy of not making minority investments into companies. They buy between 50 and 100 companies a year, the vast majority of which you never hear about, right? But they're not a particularly active corporate investor. Intel eclipses all of these companies in terms of the dollars invested and how active they are. All right, I've picked a few companies here that I think are noteworthy for various reasons. I think I have about maybe 12 companies. Many of them are going to be familiar to you. I think that what I found so interesting in putting this presentation together is the diversity of market applications and solutions that these companies address. Magic Leap, I suppose, is most notable for the fact that they have now raised almost $1.5 billion, and it's still unclear as to when they're going to be shipping a product. They've clearly been a pioneer in this space. But we've got Magic Leap in the whole so-called mixed reality space, Captricity, which is all about capturing handwriting and text and pulling that data off. Cortica, which focuses on in-image advertising. Advertising has become quite an interesting area for computer vision companies, because more and more of us are cutting the cable, getting all of our video and television entertainment from Netflix. That's meant that we don't sit there watching ads in the traditional way. So in placements of products that are often done through computer vision, and switching out a particular car in the ad for one that is regionally appropriate has become important for monetizing games, monetizing video. Blipper has raised $100 million now. Is pioneering augmented reality via smartphones, and I'm going to get to that in a few minutes, because that's again an important disruption that's happening here. Affectiva and I apologize, I don't have the time to talk about all of these, but Affectiva, using computer vision to derive analytics from how happy, sad, the emotional state of somebody just by looking at their face. MIT bought, Apple bought a company called Emotion, actually two companies, Emotion and FaceShift last year. So, we can expect to see more and more of that type of technology showing up in consumer products. Usense, a company in the Bay Area that has some very interesting technology for enabling AR, VR users to interact with their environment and see their hands in front of them, interact with virtual objects. Blue River is the company we heard previously, farming technology. Huddly, I think, is an interesting company in that they are looking to transform a mass market that we don't often hear about in the context of computer vision. So they're targeting the video collaboration, video communication space. The Skypes and Zooms and WebExes of the world, saying what happens if you put a very powerful computer vision processor, in their case it's the Movidius, now Intel processor, into a webcam. And so they're mining this intersection of computer vision and video collaboration. Intuitive has some very interesting technology, silicon-based technology, for embedded vision processing. Obviously, looking to get pulled along in the successful exit that Movidius had to Intel. So, what's happening now in the M&A space? Again, looking at the same period of time that we were looking at venture. And by the way, what you see in any market and computer vision or any technology, whether it's nanotech of 10 years ago and now computer vision, is that there is massive overinvestment by VCs in the hot area, computer vision, AI, so forth. And it's like this sort of pig in a python that sort of works its way through the python. And then, some of those companies go on to be billion-dollar successes. Some of them hit the wall, and the others get sold. And so, there will be a lag, as there always is, between this, investment that's been happening in computer vision companies and AI companies for the last few years, and the peak of the exit opportunities. What was particularly interesting to me in this period is that, you see that consumer was the biggest category by deal volume. Right? Remember, it was 70% by dollars invested, 40% in terms of the number of investments, the number of exits. But of course, automotive was 75%, and really because of one deal. Right? If we took Mobileye out of this chart, you'd see a very different story. I should have done that. That's what we're seeing currently. And of course, the other interesting thing to note is that consumer by dollars spent on M&A was only 2%. Right? So a lot of activity, but we can assume that based on this chart, that these were relatively small strategic tuck-in acquisitions where most of them have happened sort of sub-$100 million transaction value. Picking the larger and more larger ones to talk about, over this period of time, here are some of the more interesting acquisitions that have happened. Intel, 3 companies, in this list, Mobileye, Movidius, and ITZY. Why did Intel pay $15.3 billion why did Intel pay $15.3 billion for Mobileye? I think because they felt like they had to. This was a market that they could not let get away from them. Be very interesting to see how this pans out. Virtually every tier 1 and you know, automotive OEM, tier one, tier two, has got Mobileye in their sights. You know, Intel is going to have a tough road ahead of them to maintain the sort of market share that you know, Mobileye has managed to create for itself. Not going to spend a lot of time on this. You know, the top public company acquirers that have you know, been snapping up these many consumer electronics companies are listed here. Again, there shouldn't be any you know, any surprise here. So in the 22 seconds I have left, I'm going to talk about what's hot in consumer and automotive. So what I've chosen to do is, of the six verticals that I identified at the beginning, I've, as promised, carved out consumer and mobile and automotive. And I have, you know, a couple of comments on each. So on the automotive front, this is a vastly simplified market map, but is designed to illustrate the supply chain of vision and ADAS technology as it flows up into the automotive OEMs. So at the top here, we've got, you know, the so-called OEMs, the brands whose name is on the car. And then that goes, you know, the tier one suppliers that are familiar to you, tier two, and so forth. And then at the bottom, we have, you know, the sensor companies, whether it's vision sensors, radar, LiDAR, and the processor that they're paired with. And then in the middle, we have this band of sort of AI. And so I put it together in this way to illustrate where I think some of the more interesting opportunities are for, you know, and I suppose in particular looking at it from a market disruption standpoint, because opportunity for growth stage, early stage companies always flows from disruption. So the biggest disruptors right now are at the top, where, you know, the OEMs and tier ones are you know, fighting over developing their own ADAS technology. And so that has you know, created significant opportunity for startups, because all of these companies are looking to acquire companies that can help them get an edge in the you know, so-called ADAS space. At the bottom, referencing Paul Gallagher's talk earlier on, you know, we see some interesting disruption at this intersection between processors and sensors, and again, not just visible light sensors, but broadly in this whole area of sensor fusion. And then the wild card here relative to AI is, I don't think anybody's really figured out yet how you know, these AI systems work in an environment, a commercial environment, as dynamic and complex as the automotive market. But clearly there is you know, a hunger for acquiring companies in this AI area. Lastly, before I summarize, in the mobile space, there are, you know, starting towards the end of this year, we're going to see this wave of smartphone companies introducing vision-capable handsets. There will be many different technologies deployed to do this, everything from structured light, time of flight, stereo vision. But, you know, as is sort of probably the worst kept secret in you know, the industry, as to the major smartphone companies introducing these vision-capable devices. Again, if I apply the same rationale and say, you know, if I'm a startup and I want to play in this space, you know, where do I start? I'm probably not going to, you know, compete, you know, in the platform area. You know, a new processor, new mobile processor, that's pretty tough. I'm going to compete against Qualcomm or, ARM. I don't think so. In the sensor and illumination space, there have been a few companies that have attempted to disrupt this space. Most recently, Envisage, focusing on near infrared technology, which is going to be important for this market. But where I would put my money if I were investing in this space is at the top level here. The companies that are going to make the most money from the consumer electronics mobile space are the ones that will produce disruptive applications that can use the embedded vision capability of the platforms that you see here. So, these guys at the top here have produced a platform, but as the Pokemon Go phenomenon showed us last year, novel applications of computer vision, in that case augmented reality, right, can catch the world's imagination. And I think that we're going to see some very interesting applications that emerge on top of these platforms and therefore opportunities for startups. Let me then leave you, this is my last slide, I promise. So where are the best computer vision opportunities? Applications that can disrupt large existing markets, not ones that are trying to create new markets, but look at an existing market, whether it's retail, agriculture, what have you, and say, if I had vision, I can save money, I can do this more efficiently, I can create a more entertaining experience. As Paul was talking about, I do think there are opportunities with novel image sensor designs, sensors that are not designed to capture a pretty picture, but that are designed with image analysis and analytics in mind. Apps that take advantage of the coming wave of 3D sensing, depth sensing smartphones. I think your imagination is the limit on that. There are some very exciting new capabilities that are going to emerge this year and next around what people can actually do with their smartphone based on this capability. There are some exciting opportunities for AI, AI for sensor fusion. I think one of them, and I'm just going to flip through here, is that most of you will have seen the Google cars running around, or now, two or three others. Training those vehicles is an incredibly labor-intensive exercise. I think companies that have the data, the simulation sets that allow computer vision systems to be trained in a virtual environment, right, will be very successful over the next few years, simply because you cannot train and retrain all of these devices by saying every time we make a change, we're going to put a vehicle on the road and drive for 1 million miles. I mentioned Mobileye. Virtually every automotive company, from the OEMs to the tier ones to the tier twos, are gunning for a piece of the Mobileye business. And so, that it's a wide open area at this point. Again, very important to think about, how you're going to make money in these areas, because the automotive business has not and is not friendly to software companies today, right? If you look at pretty much every layer in the automotive business, and I could say the same thing to a certain extent in the mobile handset, other than apps, in the automotive business, companies are expected, the semiconductor companies are just expected to give away the software, right? So there are very few companies that you can point to that have been successful licensing software into the automotive supply chain over the last few years. Not sure whether that's going to change. So, obviously run out of time. Thank you very much for your time and attention. Tried to cover a lot of ground here. Very happy to take questions or follow up after the session.